another episode of the Moving Markets Podcast. I'm Jeffrey Dunyan, owner and founder of Safe Option Strategies. Glad to have you here on Monday, March the 25th. Real quick announcement before we even get into today's information. Because of some travel that is upcoming this week, because of some family things that are going on, there's only going to be a couple podcasts this week. I know last week, Friday, we did not get a podcast that dropped. I didn't think it was a super eventful end to the week, although the Dow did sell off a little bit. We'll talk about that a little bit in today's podcast. I'm going to talk about what's coming up in this week and what to expect. I'm not going to be in a position where I can do a podcast on Tuesday or Wednesday night. I will most likely do one on Thursday, and I will absolutely for sure do a podcast on either Friday or Saturday to wrap the week up. And then the following week, we should be back to a very normal schedule. Again, there's some travel going on this week with me and my family. There are some other family things going on this week. And I'm just not going to be able to do more than a couple of podcasts this week. So I wanted to give you a heads up early on so there's no expectation for anything different. For members of Safe Option Strategies, don't worry. We'll be updating things on a regular basis. I'll be paying attention to the market all week long. Just may not be time to record a podcast. If you like the podcast, if you like the information you're getting, if it's helping you, make sure you like us. Make sure you subscribe to our YouTube channel. Whatever you do, take a minute to get onto Safe Option Strategies or sostrades.com. You got to take a look at what we're doing because we have not lost money on a trade so far this year. Every single trade we have sent out to our members since the beginning of this year has been a profitable trade. There are a handful of them that are still open, some that'll close that are profitable right now. One open trade that's a tiny bit negative, but nothing serious, and it's going to be positive within a couple of days. So you want to become a part of this. You want to not miss out on this. I promise you, it's worth taking a look at what we've got going on there. Go on sostrades.com, check things out, make sure you're participating in some way if at all possible, and get in on these profits that we're generating for the members of our program. With that said, go ahead and enjoy today's podcast. Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Monday, March the 25th, 2024. The U.S. stock market has been closed for several hours. I'm actually recording this early evening, so maybe I should have said good evening, everyone. But let's jump in. I'm going to do something. I do this maybe once every third or fourth Monday. I'm not going to record something separate for Safe Option Strategies members and for those who are not Safe Strategy members. I'm going to let those people who are not a member of Safe Option Strategies in on our trade strategy for tomorrow morning. And if they're listening to this podcast tonight or listening before the market opens in the morning, they can get in on exactly what we're doing tomorrow and participate in one of our perfect record trades so far this year. Every trade we've opened on spread trades is either still open and doing what we need it to do, or it's already been closed for profit. So we're off to a fantastic start right now. Tomorrow's trade that we're going to open is a long iron condor on DIA, the Diamond Spider Dow Jones ETF called everyone refers to it as the Diamonds, but DIA is the ticker symbol. We're going to go out to April 26th, about 1 month out from right now. We're going to set up a bear put side at 392.50 and 3 days 750, a $5 spread on the put side. We're going to open a bull call side at 395 and 400. That creates a $5 spread on the bull call side. And I set this limit order at 375, and I was putting this together a little bit before the market closed. At the close of the market, this is really important. At the close of the market, this mid price right here jumped up to about 385. Now, I am going to leave my limit order in place at 375 because right now pre-market is pointing up a little bit for tomorrow morning. That could change tomorrow, but I have a feeling after Friday's sell-off and today's sell-off, I think things are going to move in a positive direction tomorrow. I think that was a couple of days pause. I think it was a little profit taking after such a robust week early last week. And I really believe tomorrow morning, unless there's some ugly news that breaks, I'll talk a little bit more about that later in this presentation. But I'm going to leave my limit order at 375. If I am wrong and the markets are not trading, the Dow Jones Industrial Average specifically, if it's not trading a little bit to the upside at tomorrow morning's open, I may change this and go as high as 385 or even 390 because I believe it would still be a really good trade, even if we got filled at 385 or 390. For those of you that may not be really familiar with the long iron condor as a trade, let me explain it really quickly, and I'm going to go ahead and bring on. I'll come back to this headline stuff on CNBC here, but let me go quickly to this chart, and we'll bring up DIA specifically on this chart, and I'll show you the basic gist of the trade. The long iron, a lot of people are familiar with an iron condor, and that's a trade that you take in a credit on. The problem with the long iron condor is you set strike prices for a bear call spread, you set strike prices for a bull put spread, and you're trying to predict that over a certain period of time, the stock is going to continue trading in between these lines right here. And sometimes to get a decent credit, you've got a fairly narrow spread right in here. And you've got to take a risk that you don't get a move up or you don't get a move down that's very dramatic and runs the price of the stock out of the iron condor. Iron condors are not the easiest trades in the world to adjust if they go against you. And so I'm not a big fan of a traditional credit iron condor. A long iron condor uses a bear put, and this is where we've got the strike prices of our bear put set right here at 392.50 and 387.50. And then a bull call, we've got the strike price set at 395 and at 400, which I'm going to put right up here. And instead of needing that stock to trade in that narrow little range right there, we want it to break out above the short call strike price, which is right here, or below the short put strike price right here. Because if it breaks out either direction, we do not care which direction this thing moves. Either direction it breaks out, we're going to profit in the trade. And we could, in theory, get stuck in a little tight range like this for a couple of weeks. I don't think that's going to happen, primarily because last week we had CPI and PPI data that both showed inflation may be creeping back up a little bit. And then Jerome Powell sort of put everyone's mind at ease. He made some comments in the Fed meeting, and then later in the week he spoke again, and he kind of relaxed everybody a little bit, made him think that, hey, we're still on pace for 3 rate cuts, which I think was idiotic for him to do. I think that was actually absolutely a stupid move for him to make. But this week, at the end of the week, we've got the PCE report. If the PCE report comes in telling the same story as the PPI and the CPI, which I believe it will, and the story it's going to tell is that inflation is creeping back up a little bit, well ahead of the April 26th expiration, I think we will break above 400 on the Dow, or I think we will easily break below this 387.50 on the Dow. It doesn't have to move too far in either direction to break out of the short call or the short put strike price. And either one of those things happens, and we're nicely profitable on this trade. I'm going to target a 20% profit. I may change that to 15 or 17% if we have to go up to 385 to get filled. But at 375, I'm setting a 20% profit, and we'll basically exit out of the trade right at 450. If we end up getting filled at 385, it'll be more like 465 or something like that. Anyways, that's the new trade for tomorrow morning. So I've already got my order set up. I've already got it in as a limit order for 375. Safe Option Strategies members, if you're able to watch Discord in the morning to see whether or not we make a change to that limit price to try and get in. And if we don't get in tomorrow at 375 or even 380 or 385, we might try the same exact trade on Wednesday morning. That wouldn't be a horrible situation if we did something like that. So, all right, let's shift gears and go over to what happened today, and maybe even talk a little bit about what happened on Friday. I really, truly don't think that today's move down in the Dow, the NASDAQ, and the S&P, had the Dow down 0.4%, S&P down 0.3%, NASDAQ down a fraction over 0.25%. None of those are real dramatic moves. They're not real huge, significant moves. And I really believe they are just a matter of profit taking that began last week on Friday and sort of continued into today's trading. We had a phenomenal week in the market last week. The Fed convinced everybody that they were going to do three rate cuts this year. I think that's stupid, and I don't think it'll happen. But after that kind of news, you had a couple of days in a row of profit taking. It was kind of big on the Dow. It shed 300 points on Friday, but the Nasdaq and the S&P only gave up a little bit. And look at this solid, sustained move to the upside. After every 2 or 3 days of upward movement, you get a couple of days of downward movement, and then the next upward move is bigger than the last two down moves were, and it's just going to continue that way. You're not. Rarely do you get 5 or 6 or 7 days in a row like this, where it's just nothing but up. You almost always get those little pauses, 1, 2, 3 days in a row, where markets sell off a little bit and then they continue going up. That's if the bullish pattern continues. And I don't expect that pattern to be any different this week than it's been for the past 15 or 20 weeks. I think it's going to continue like that. Futures for tomorrow morning are already up a little bit, albeit not that much. Tomorrow, in terms of headlines, we're going to get durable goods orders. We're going to get home price index and consumer confidence. Any one of those things could move the markets a little bit. I don't think any one of them, unless they came in so out of line with what the expectation is, I don't expect any of them to really move things. When we get to Thursday, in addition to the jobless claims that we get every Thursday, you're going to get a consumer sentiment reading and a GDP, third estimate on fourth quarter GDP. Those GDP numbers, in my opinion, they're becoming less meaningful. In part because I think the numbers are inaccurate, and I also think there's this house of cards right now with most of GDP being built on the backs of government spending, and that is not sustainable. And that's why it's a complete house of cards and not something. A good GDP number is not something that you should get overly excited about. But when we get to the end of this week, and when we get to the PCE, a lot of people think that this is the Fed's preferred inflation gauge. The expectation is already that it might be up a little bit, up from 0.3% to 0.4% month over month, and up from 2.4 to 2.5. Just like with the PPI numbers and the CPI numbers last week, I think these numbers are going to come in just a little bit more than what that expectation is. I think people are going to be a little bit surprised with a higher number than what you see there. And if that happens, Powell might not be able to talk his way out of it. The Fed might not be able to make any comments that are going to persuade the market that all is well and everything is okay and business is normal. I think it's going to be hard for Mr. Powell and company to cut rates more than one time this year, and I'm in this camp pretty solidly that if he does do even a single rate cut this year, if he does it after June, it's going to look horribly political. I personally think there is at least a possibility that we only get one rate cut or get zero rate cuts. And if that happens, and when the Fed finally comes clean and says we may not get a rate cut this year, and they're going to have to at some point, you're going to see this market roll over and sell off pretty big. Right now, I would still be good with a healthy correction. I would not mind seeing this market correct back a little ways, go in a bearish trend, but not move past a 5 to 10% correction situation. I think that would be healthy for the markets. I think that would be a good reset and give us a better chance of maintaining a flat to slightly bullish market through the end of the year. If we do not get that correction sometime in the next month or two, I think this house of cards is going to come crashing down hard, and I think it's going to be way more than 10% when Powell and company finally tell the truth. I've been very anti-Jerome Powell. I've not been a fan of his, especially when he started using the term transitory inflation with the entire Biden administration, thinking that they were somehow clever enough to fool us and make us believe that inflation wasn't going to be as bad as it was and wasn't going to stick around as long as it was. Everyone saw through that BS if they had even half a brain. If you had half of your brain cells functioning the way they were supposed to, you saw right through that BS and you knew that things that were going on were going to cause inflation to stick around and be much worse than they were saying it would. Once Jerome Powell came clean on that and stopped saying transitory inflation,
I went a long time believing that he was being more honest, that he was being more transparent, and I felt that way right up until this most recent Fed meeting when he stuck to his guns on 3 rate cuts before the end of the year. I don't think he's going to be able to do them, and I think if he does, it's going to be a massive mistake. And thank heavens, I think every passing day there's an increasing chance that we're going to get a different administration at the end of this year, and thank heavens for that, because I think Powell will be out on his butt within minutes after inauguration, and we might have a chance of salvaging 2025 if I'm right, and if Powell does make those rate decreases. Because if he makes those rate cuts, inflation's going to rear back up, or we're going to get a very prolonged stagflation situation. So I mentioned in a little intro piece that people that are non-Safe Option Strategies members, I mentioned that there are only going to be a couple of podcasts this week. I will not be able to do a podcast tomorrow, and I will not be able to do a podcast on Wednesday. I might be able to do one on Thursday, but I will for sure do one either Friday or Saturday that will be a wrap-up of the entire week. So I wanted to give everyone a heads up. I was not able to do one last Friday, and between some travel and some family stuff going on this week, I know tomorrow afternoon is out, and I know Wednesday afternoon is out. But I may be able to do a podcast on Thursday, and I will for sure do one on Friday. So I'm going to wrap this one up right there. I don't need to go on and on. We'll see how things play out over the next few days. And for Safe Option Strategies members, don't worry. I will be updating trades. I will be sending out adjustments. I won't leave anybody hanging on any of that type of stuff. I just won't be able to do the podcast. So but watch for other alerts and adjustments if we need to make them. Have a great week, everyone. And for sure watch for the next podcast to drop either Thursday or maybe Thursday and Friday and Saturday. Thanks. Bye-bye.